Hello, folks, and welcome back to another episode of the Daily Crypto Byte. Today is Tuesday, December 7th, and I am as always, joined by my co-hosts CJ Reichel and Jon Dr. Bounce Najarian. As his name implies, we're showing a little bit of strength here, bouncing from those critical levels, holding above 50K, finally seeing some relief in this market, which is good. We also have some assets making some climbs to new highs like Matic and Luna. So strength seems to be picking up where it left off last week before that massive liquidation event. Good to see. We'll talk about that and a whole lot more. But before we dive into things, Doc, CJ, how are you guys doing today?
I'm well. Got some good sleep last night. That always helps. Market bound. So, let's take it from here. Let's see what we got. Jon, how you doing this morning, my friend?
I'm doing well, guys. As you two know, I'm down here at Blockchain Week in Puerto Rico, and let's see who's down here. Well, Sterling Wetsky, who was the former head of the Winklevoss family office, and she lives down here now. Runs a bunch of their businesses from here. Let's see, Immutable Holdings. Down here, HOLD.me, Michael Turpin, just a whole bunch of crypto folks down here. There's always a lot of crypto folks down here, but even more for Blockchain Week, and Coin Agenda and a bunch of these. There's like several simultaneous events going on throughout the week. And then I'll head up to Miami for live trading on Friday and hanging out with the folks on Saturday. So looking forward to it. It's going to be fun. And certainly the bounce felt good, guys. I mean, we talked about a bunch of those cryptos like Hut 8 and a host of others. And sure enough, they came back to life, which was nice because, that's something that you always hope happens when you get an aggressive sell-off like that, is that you get a little bit of a blow-off. And boy, did they catch a lot of people in the markets short, not just in crypto.
Yeah, absolutely, Jon. That's one thing that's very interesting about this liquidation event, is that we saw liquidations on both sides. First we saw them stack up long, now and then we saw them short as well. So lots of money exchanged hands during this last week. Very interesting. Yesterday we talked about the fear and greed index being at 16. How are you feeling down there in Puerto Rico? Does that feel right? Are you feeling the fear, or do people still seem bullish down there?
Well, as you might expect, I know that's a leading question, given that people that are down here are probably not the haters. All the people that are out there always writing about, oh, it's a Ponzi scheme and so forth. By the way, I think you guys might have got it as well, but if you didn't, I'm going to pass it on. Pantera had just a fabulous letter that Pantera Capital, one of the first crypto hedge funds, put this letter out, and they address all of that. All the people that are always saying, oh, it's a Ponzi scheme, or, this is all going to end badly and all the rest. They did a very nice job with an overnight letter. And it's, obviously the war or the fight is never really over. People that don't get crypto assets and are somewhat happy that they never got them are stupid, quite frankly. Because if they would have just got them last November, they'd be, up what right now, guys? 5x from last November, 4x at worst from last November. You didn't do that in Tesla. You didn't do that in Apple. So as far as the fear, I'm surprised, Monty, that it was at a 16, because that is such extreme fear. That might have been lower than the readings. Did we get to 16 after the May sell-off and so forth? I don't remember that. I remember 18 and under 20. I don't know if we got to 16.
Yeah, I mean, this is the most fear I've remembered in the market in quite a while. And CJ, I think you did a good job yesterday talking about kind of how, each time we retest those lower bounds of fear, it's typically an ideal time to accumulate. How are you feeling today? Bitcoin's holding up above 50K.
Yeah, to John's point, we did go to 14 in May. This is familiar territory in terms of fear and sell-offs in the crypto market. So, yeah, I think it's a good time to accumulate. I mean, that's what we were saying yesterday, and this relief bounce is, looking good so far. And in terms of those who don't want to buy crypto or those who have not bought crypto, I mean, the revolution waits for no one, and that's why Monty and I don't get a lot of sleep because these are opportunities that will not be around forever. I think we're privileged to live in an era with crypto and have these type of opportunities for returns. But I'm getting a little ahead of myself.
Yeah, no, I
Yeah.
completely.
Well, just like you're saying, yesterday we didn't just talk about crypto. We did talk about, um, some of the stocks that are related to it. Uh, and I named a bunch of them already. Again, hold.me, that's immutable. Hut. Hut is up from basically just under 8 yesterday to touching 10 this morning. Now, that's a nice run. And it was like 980 just a couple minutes ago. It touched 10 in the pre. Riot, Mara, MicroStrategy, all stocks that did pretty darn well there. So we also talked about, would you rather be buying the dip down 20% or buying the high? I know my buddy Joe Terranova always talks about buy high and sell higher. And certainly it's good to be on a trend and jumping on that. But like we said yesterday, just zoom out a little bit. Just look at where crypto is. If you want to look at it, penny by penny, and tick by tick, most of you are not equipped to do that. GTS is, Citadel is, Cumberland and Grapefruit and a bunch of these jump trading, they all are equipped to do that because they're high frequency. If you're not high frequency, I think just zoom out just a little bit on your charts and you won't get nearly as panicked. And instead, you'll likely be a buyer on dips like we were yesterday.
Yeah, John, and that's what I was talking about with some of the members in the room on Friday night is the reason why these long-term holders and whales are able to be so profitable in this market is they're able to stomach that interim volatility because they do what you just said. They zoom out and Bitcoin is very volatile day over day. We see 10K daily candles like we saw on Friday. That is very unusual for any market. But year over year, Bitcoin actually is not that volatile in the sense that it just goes up. And every 4 years we've seen Bitcoin appreciate in value roughly to the same scale, follow that stock to flow model. So in that sense, it's really not that volatile. And I think that that's what those long-term holders and whales are able to understand. And for those reasons, they don't sell or capitulate during those massive red candles like we saw on Friday.
One other quick thing, if I could, sorry, CJ, was just, there's a bill right now being proposed in India that they're going to ban crypto payments and that people that accept crypto payments could be subject to jail terms and things like that. How bad must your rupee be? How bad must your currency be for you to have to implement something like that to try to force people to use that crappy currency instead of something that they could buy things with around the world? And again, I'm not one of those guys that's going to use my Bitcoin to buy stuff, but I think people should be able to use crypto to buy things. And certainly, if you wanted to use Doge or Shiba Inu or any of that, massive stuff that is not like Bitcoin with a very limited quantity compared to everything else, you must just think that your currency really is crap if you're so worried that you might have to jail people for using a crypto. Just wanted to throw that out, CJ.
Yeah, I mean, honest words, very direct, and probably true. But yeah, another interesting chart I did want to share has to do from whale maps. And this just showed a little bit of accumulation in terms of relative dip buying. So I thought that was interesting. But overall, the larger these bubbles are, the more BTC inevitably is acquired by whales. And interestingly, we can see a little bit more specifically about how these whales bought the dip. You can see that last night, or rather on Friday when we crashed, some of them caught the falling knife, but a lot of those don't want to, catch a falling knife. They'd rather wait to see, a bounce from support. Now that we're getting that bounce from support, a lot more whales are actually stepping up and deciding to accumulate. So we'll see if this, 60 level really becomes some harsh resistance, or what it entails for the future trend if we are to retest it. But overall, I think that's pretty promising to see that, getting a bounce from support here. It looks like a very textbook bottom in the short term, and it looks somewhat primed for an auto rally to the moving average at roughly 60K. So I do think we will likely test that in the short term, especially with the S&P just absolutely ripping to the upside. I haven't seen a candle like that in quite a while, especially with that gap up as well too. But if you look at the Nasdaq, IWM, just seeing a lot of bullish price action across the board. So we'll see if that maintains in the equity markets, because if it does, I think it'll be great for crypto as well.
Yeah, I agree. We'll be watching the equity market closely. I like what we're seeing so far. One thing I just wanted to quickly mention that kind of ties in with what you were talking about there, CJ, is this chart here. And this is basically any Bitcoin wallet with more than 1,000 Bitcoin. And this is what we, classically refer to as a whale. Lots of people have been comparing Friday's sell-off to the capitulation that we saw earlier in the year, back in May. And one thing that is very, very different this time around is the behavior of these whales. As you can see, one thing that's typical during the start of a bull market is distribution from these whales. We saw them starting to sell. The number of Bitcoin wallets with more than 1,000 was decreasing as we continued to make new all-time highs. That ultimately led to this correction here. But as you can see here, as we've been, continuing to climb, and even during these sell-offs, this level has not fluctuated, implying that the whales are not the ones distributing into this market weakness. In fact, as CJ just implied, it seems like whales are stepping in now and buying the dip, and even more so buying the strength following the dip. So we'll be watching those numbers closely to see if, in fact, long-term holders in whales increase as we, continue to see some strength here this week.
Historically, the whales have enjoyed buying strength and not catching falling knives. I remember when we were retesting those lows during the summer, and we got a ton of shorts that really levered up near the bottom at about 30K, 29K, when it looked like we might have a possibility of going to 25K at that particular time in the market cycle. But then once we got the short squeeze, boom, right to 42K, all those whales were like, all right, the bottom's in, time to get back into the trade. And so perhaps this is something similar. We haven't seen a short squeeze of that magnitude. Nonetheless, I think the sentiment is somewhat similar. Another model I just wanted to flash real briefly that we did have questions on in the community yesterday was surrounding the pi cycle top. And, we will use this indicator to predict and hopefully call the next local high in Bitcoin in terms of a market cycle top. You can see here in 2017, it worked very, very well. And then once again in May, as we did see that distribution. But as you can see now, we're nowhere near an intersection or a top signal within the pi cycle top. We're actually starting to find some support here at that lower moving average. And we have found support there historically as well. So we're going to keep monitoring that. But as of now, there is not a risk in terms of getting a top signal or whatnot. So
Yeah, I want to toss one more question to you, CJ, before we wrap things up here. And it has to do with that pi cycle top indicator and just the overall timing of this market cycle. We've talked a lot about reaching 100K by December. That's what everyone's been throwing out there. You said yesterday that trade got a little crowded. So now, what are you kind of expecting? Just a push back of this market cycle? That pi cycle top still looks pretty diverged, so it could be a while before we see that, convergence.
Yeah, for sure. And markets have a way of punishing the majority, and that obviously happened after that trade did get crowded, like you'd mentioned. Um, Nonetheless, I do think we may that may prolong kind of the bull market. I have a feeling if it ends, it will probably end with a more blow off top, kind of like what we saw in May, where liquidations just occur rapidly. Being said, the pi cycle top, yeah, it looks to have gotten pushed out further, so that we probably won't top maybe until the spring or later on throughout Q1. But overall, as for the shorter term, my focus is on 60K. It's going to tell us a lot about the trend and whether or not we can get above that level after it was serving as pretty strong support. So 60, I think we'll trend there in the short term, but overall, that's going to be interesting once the trend, or if the trend gets back to those levels, because it's been a critical level historically.
Absolutely. And tomorrow, we'll be doing a member-only webinar at 11:30. We'll be taking a look at some indicators that you guys can watch going forward that may kind of be some red flags to watch for, market tops or possible liquidation events like we saw on Friday. So we'll be looking at some on-chain metrics, some open interest stuff, and also just be, as usual, taking a look at some various crypto assets for you guys. So tomorrow at 11:30 Central Time, we'll be doing that webinar. If you want to check it out, you can sign up for our crypto room for just $7 for the first week at marketrebellion.com/try crypto. We do these webinars weekly. We also have a 24/7 chat with a community of traders from all around the world, a pro charting service, news, trade insights, and an extensive education curriculum with over 20 hours of informative content about the crypto space. So definitely head over there and check that out if you're looking to learn more about crypto. And as always, thank you to Voyager for sponsoring this show. If you guys are looking for a place to trade crypto assets, earn some interest, we recommend you head over to investvoyager.com, where you can earn up to 12% interest on assets like DOT and 10% on USDC. And if you head over there and check them out, use code REBEL25 when you sign up for $25 in crypto. Well, that's all we got for today. Please don't forget to like and subscribe. Helps out a lot. But have a great rest of your week, folks. We'll see you again tomorrow. Take care.